Forex training or tutorials is not easy to find on the internet, but we here at Leading Forex are trying our best to give you detailed explanation and tutorials that will help you begin your journey as a Forex trader. My name is Kofi, your admin for this channel. In today's video, we will continue from the part 43 video. In the part 43 video, we talked about the types of moving averages. And we realized that we have exponential moving average and then simple moving average. We also talked about the advantage and the disadvantage of these two moving averages. In today's video, we will continue with a question that we left in the part 43 video. There was a question we left in that video, and the question says, is there a way to combine the exponential moving average and then the simple moving average? We will answer that question in this video. And then in today's video, which you are watching right now, we will be talking about a strategy. There are a lot of moving average strategies that you can find on the internet. Once you Google it or you search for it on YouTube, you'll find a lot of them. And one of the common ones you will find is moving average crossovers. So today, we will be explaining the concept of moving average crossovers and what they mean. Once we do that, we will give you the free chance to start searching, if there need be, okay? To start searching for people who are good at moving average crossovers in terms of using moving averages to trade as a strategy. And then out of that, maybe you may be able to develop your personal strategy out of that. Is that okay? Because there are a lot of strategies people use in terms of moving average crossovers. In terms of the numbers, which is the periods, we have those who use 25 and 50. We have those who use 9 and 25. We have those who use 200 as against 100. We have those who use different numbers, different figures. I don't know what figure might be good for you. So once you comb on the internet to find out what others are using that is working, maybe you can be able to get your own strategy out of that. So first of all, we need to let you know what moving average crossover is all about and what that strategy is all about before you can then go and search for whatever you want to search for. And then again, we will tell you the advantages and disadvantages of using moving average crossover as a trading strategy. Now, when I say trading strategy, what I mean here is that moving average crossovers can help you to identify the trend of the market, help you to get an entry point, and also help you to get an exit point. So it means it's going to be a system that you can use to trade, that you can use to enter into the market and also use to exit the market. So the moving average strategy or whatsoever someone will tell you is a strategy. That is the three basic things the strategy is supposed to do. So whoever is giving you a strategy, that strategy is supposed to do these three things: give you the trend of the market, give you an entry point, and also help you know an exit point. Once you have these three tools or these three basic things in that strategy, then you know it is a strategy. Is that okay? So today, the simple moving average and the exponential moving average that we'll be looking at, we are looking at their crossovers, crossing each other, which is a system or a tool or a strategy, if I'll put it, that people use in trading. So we'll show you the whole concept. Then you will go out there and look for the periods. Which one will work better? Is it going to be the 50, the 100, the 200, the 9, the 8, the 15, whatsoever? I don't know. But my job is to give you the idea in getting your own strategy here. So today, this is what we are going to do. So this video might take a bit long because we'll do the theory and then do the practicals. So take your time and listen to this video from the beginning to the end. And I'm sure you'll get what you need in this video. So quickly, let's go to the theory aspect and look at some notes in terms of moving average crossovers before I will take you to the MT4 for us to do the practicals and see how it works. Is that okay? If you agree, please like this video. Once you like this video, what you are telling YouTube is that YouTube should recommend this video to other people because the video is good. Once you like it, it means it's a good video. Okay, so please like our video so that YouTube can suggest our video to more people to watch. Is that okay? Thank you for helping us grow. All right, now let's go straight up to the MT4 for us to see, or to the notes, first of all, to the notes, for us to see what we have today in terms of moving averages as a strategy. Now, we have the notes here, okay? So we will look at the note first, and then from there, we will continue. So the note is very simple. It's not a very long note. Let's go back to it. I don't know what happened. Okay, let's go back to the note. Okay, I think we are back at the note here. So let's look at what the note says quickly. All right. Now, first of all, let me say that moving average crossovers is not a difficult strategy. It is a very simple and easy. Let me use the word easy. Very simple and easy strategy that whoever is interested to use for trading can use it for trading. Okay. Now, before I even take you to the note, there's a motivation I want to share with you today. And this is the motivation I want to share with you today. If you're a Forex trader who is struggling to trade the Forex market, or you are in a particular field and you are having difficulties, I want to share this motivation from Samuel Eto'o. I don't know how many of you know him. He's a footballer, retired now. He's played for Barcelona as a striker, Chelsea, Juventus. No, is it Juventus? No, AC, no, Inter Milan, and so many other clubs. He's played for these teams as a striker. And Samuel Eto'o, as we speak today, he is the Football Association of Cameroon. He is their president. So when it comes to Cameroon Football Association, Samuel Eto'o is their president. Now, before he became president of this football association, he promised the people of Cameroon that if they should elect him as their football association president, he was going to win the first African Cup of Nations that was going to be played in Cameroon. I think they played it just recently. They played the African Cup of Nations, which is the AFCON, I think a month ago. Yes. So Samuel Eto'o promised them that, yes, since they were going to host that tournament, if they should vote for him as president, he's going to make sure that he wins that tournament for the nation Cameroon. And then again, his second promise to the people of Cameroon was that they are also preparing to go to World Cup. So they are playing World Cup playoffs. Once they vote for him as the president of Cameroon Football Association, he will make sure that he will qualify Cameroon to the World Cup. This is the two promises that Eto'o gave to his nation. And lo and behold, he won that election as the Cameroon Football Association president. Now, after he won, it's even not up to a year as it stands. The AFCON that was played recently, which is the African Cup of Nations, they played it in Cameroon. And unfortunately, Cameroon didn't win the tournament. They came third. Okay, I think Senegal, Sadio Mane and his Senegal, Sadio Mane of Liverpool, I'm sure we all know him, and his Senegal team won the tournament. And then Egypt, Mohamed Salah and his Egypt came second, because it was Senegal and Egypt that played the they played the finals. And then Sadio Mane and his Senegal team won. Now, the third and fourth place, it was Cameroon that came third in terms of that tournament. I know maybe most of you are not football loving fans, but pardon me for this story I'm telling you here. Now, so it means the first promise of Samuel Eto'o to give his nation the African Cup of Nations that was recently played didn't come through. He lost it. And then also, as we speak right now, yesterday, which was Friday, 25th of March, 2020, we had the World Cup playoff, okay? World Cup qualification playoff, yes, if I'll put it, between Cameroon and Algeria. And Algeria scored Cameroon a lone goal. They scored them 1-0. And there is a return leg on Tuesday coming, which would be the final decider of who goes to the World Cup. All right. Now, as it stands, right after Cameroon lost to Algeria yesterday, Friday, Eto'o took to his Twitter handle to say this. And that is what I'm interested in. This was what Eto'o said. He says, the work of today makes the victories of tomorrow. Keep going. This was his message on Twitter. The work of today makes the victories of tomorrow. Keep going. Samuel Otofios is the one saying this. Now, goal.com, which is a very popular football website or platform, also picked this tweet and then they placed it on their website. So I actually pulled this from goal.com and I actually authenticated by going to check on Samuel Otofios' Twitter handle, and the same post is there. Now, what can we learn from this post? As Forex traders, this is what Eto'o is saying, and I want you to relate it to the Forex market. He's saying that the work of today makes the victories of tomorrow. So keep going. It is true that you might be in difficult times now by trying to learn the Forex market or learn how to trade the Forex market. Things might be tough. You might be struggling. It may seem you are not finding the way. Some may even tell you this is a scam. Why don't you stop this thing? Why will you keep throwing money away? Why will you keep losing money and you won't stop this? Samuel Otofios is telling us that the work of today, what you are doing right now, okay, will bring the victories tomorrow. Yes, whoever wants to be victorious will have to start from somewhere. And it is not only us as traders. We are new to this market. We are now trying to know the market. So it won't be easy for anybody. So you just have to keep going. You just have to keep going, because the work of today, what you are trying to learn today, will make the victories tomorrow. Whoever is rich, whoever is finding things easier today, had a foundation from maybe a family, a friend, or whoever that has helped, or the knowledge he acquired from somewhere. So it hasn't been easy for anyone on this planet. Everyone is struggling to make it in life. So your works today will make the victories tomorrow. So we just have to keep going. So if so far you have watched my videos up to part 43, and today you are watching part 44, and you still think you don't get this is not for me, fine. You can pull out and then find something else. But if you still think that this is for you, then you must understand Samuel Otofios' stand here. The work of today makes the victories of tomorrow. So keep going. This is what Eto'o is telling all of us. So we want to keep going. We are not going to relax on this. We will keep going. In case you want to contact me, these are the handles to contact me. Telegram at Kofidola, email, and then phone number. All these details are there already. So let me continue. Now, leading Forex, our aim is to be an alternative in the status quo that you are stuck in. That is what we stand for over here. Now, let's go straight to the notes and then finish this video once and for all. Now, a recap of what a trend is. You remember in the part 43 video, we talked about what a trend is. Let's do that again. A trend can be defined simply as the general direction of the price over the short, immediate, or long term. And in the part 43 video, we said that when you identify a trend, that trend can either be short-lived. It can maybe go up a bit and then stop, or it may go to that direction of the trend for a day or two and then end, or it may continue for a long time. So a trend can either be of a short, immediate, or long term. So once you have a tool or you are doing analysis and you are able to spot a trend. A trend simply means the direction of the market or the direction of the price. If you are able to spot the direction of the price, you should be able to ask yourself that, okay, this direction, is it going to be for a short period of time or is it going to be for a long period of time? You need to know, okay? But it is difficult to know. That's the truth. It is very, very difficult to know how long a trend may go. It is very, very difficult. It is not an easy one. If that was easy, everybody would be a good Forex trader. But because trends are not so easy to find, and even when you find them, you are not sure whether they'll be short-lived or long-lived, it becomes a very worrying issue to Forex traders. All right? Now, but let's continue. Whether it is a worrying situation or not, we'll still find our way through. Some trends are short-lived, just like I said, while others last for days, weeks, or even months. Point number 3, but you don't necessarily know how long a specific trend will last. That is the third point. Now, a technical tool known as moving average crossover can help you identify when to get in and get out. Are you getting the analogy here? What we are saying is that a trend is very difficult to predict or to say whether it will be short-lived or long-lived. But there is a tool known as moving average crossovers that can actually help you to identify when to get in and get out. Okay, the moving average crossovers is just to help you get in and get out. So it means that the moving average will help you to enter into the Forex market to get an entry point and then an exit point. So the use of moving averages will help you get an exit point and then an entry point. Let's continue with the note quickly, and I'm sure you will get to understand this in an interesting way. Now, let's continue. A moving average crossover occurs when two different moving averages or lines cross over one another. And what we are trying to say here is that you have two moving averages. Let's say it's going up like this. And then there's another one that comes and then crosses the first one. So the cross area here is called the moving average crossover. So it means one moving average has crossed the other. Is that okay? Or assuming it is a downtrend, so the trade is coming down, moving average coming down, then another moving average crosses the first moving average. So once you receive the cross, the point of the cross here is what we are interested in. And that is what we call moving average crossover. So one moving average crosses the other or crosses over one another. That is what we call the moving average crossover. Is that okay? Now, a moving average crossover system helps to answer 3 questions. So let's look at the 3 questions moving average crossover will help us to answer. The very first question is, which direction might the price be trending? Yes, every Forex market has 3 main structures. 3 main structures. The structures are an uptrend or a downtrend or a consolidation. Or in another language, we can say a bullish market or a bearish market or a sideways market. Or better still, we can also say a buy market or a sell market or a ranging market. So it's either the market is going up or going down or it's moving sideways. These are the 3 main structures of the Forex market. Maybe in another video, I'll take my time to explain this in detail, but please have this at the back of your mind, that the market structure is in these 3 categories. It's either the market is going up or going down or it's in sideways movement. It's always the case. It is always the case. So if the market is moving up, it means it's an uptrend. If the market is moving down, it means it's in a downtrend. If the market is moving sideways, then we can say the market is ranging or consolidating. Is that okay? Now, point number 4 says that where might be a potential entry point for a trend trade? So already the moving average crossover is helping you to know the direction of the market. And it is also helping you to answer the question, where might be a potential entry point for a trend? Remember, we said that the moving averages are used for trend trading. Without trend, you don't trade using moving averages. This is the key point. Write it down. Without a trending market, you do not trade using moving averages. You will lose. Anyway, I'll explain that further. Because moving averages are trend indicators. They give you accurate predictions when the market is trending up or trending down. When the market is trending up or trending down, you will get moving averages to give you good predictions or entries or exits. But when the market is ranging or consolidating, you will have a lot of issues. So our primary concern is that the moving average crossover strategy or system will help us to know our entry point in the market, when to enter into the market. And then the third answer that this moving average crossover will answer is, when might a trend be ending or reversing? We do not know the exact point a trend will be over, or we do know the exact point a trend will be reversing. So we are interested in knowing that, okay, at this moment, it is possible that the trend might reverse. So let me get out of the market. That is what we are interested in. So the moving average crossover will help you to at least have an idea that at this point onwards, it is possible that the trend might change or the trend might be ending. So get out of the market. So the moving average crossover strategy will help us to answer these three questions. And I think it is a good one. Any system that will be able to do this well is a good system, okay? So let's continue with the notes. One thing to take note of with a crossover system is that while they work beautifully in a volatile or a trending environment, they don't work so well when price is ranging. I have already said that when the market is chopping or the market is consolidating or ranging, moving averages will give you bad signals. Moving averages will give you bad entries. It will give you bad decisions in ranging or consolidating markets. But when the market is trending, when it is trending up or trending down, moving averages will give you good entries. All right. The next thing here is that you might get your stop loss hit with tons of crossover signals, and you could find yourself getting stopped out multiple times before you catch a trend again. So because the market is not a better one for moving averages when it is ranging or consolidating, we are saying that when you use moving averages in a consolidating market or a ranging market, you get your stop loss hit several times. And you may get bad signals or false signals severally before you can finally catch a new trend. So these are the disadvantages of using moving averages. It is not good for consolidated markets or consolidation markets. Your best bet is an uptrend on a buy trend. When the market is ranging or consolidating, moving average is not good for you. But the question still lies here. How will you know that this market is ranging? How will you know that this market is consolidating? Or how will you know that this market is trending up or trending down? Let's continue and see what we can learn as we move along. All right. Now, so these are some bullet points that you need to take note of. Now, let's go to the charts. Before we get to the chart, please subscribe to our channel, okay? Make sure you subscribe to the channel and expect more videos to be posted here on this channel. Also like our video, because that will help YouTube to actually suggest our video to more people. Is that okay? Thank you. Now we are on the chart. So we are saying that moving average crossover simply means one moving average will cross the other. And then that will also be the point that I will answer the question that I asked in the part 43 video, where I said, is it possible to use a simple moving average with, or combine a simple moving average with maybe exponential moving average? Is it possible to do that, or is it good to do that? I asked that question. Now, the answer is yes. you can use a simple moving average with an exponential moving average. Now, remember the two moving averages, their strengths and weaknesses. We realize that the simple moving average is good in determining the overall trend of the market. And so it will be good you use the simple moving average for long periods, okay? Long periods. So you might use, if you are going to be using 2 periods, maybe one moving average is 10, and then the another one is 20. The 20 will be a long period. So it will be good to use a simple moving average for the 20 period, and then use the 10 period for an exponential moving average. Please, is this clear? Again, if you want to use the two, it will be good to use the simple moving average for long periods and use the exponential moving average for short periods. So assuming you want to use maybe 50 and then 100 for two moving averages. The 50 will be looking at 50 and 100, which figure is big? This big is bigger than this one. The 100 is a huge figure than the 50. So you can choose to use the simple moving average for 100 and then use the EMA, exponential moving average, for the 50. So always you can use the smaller number or the smaller period for EMA and use the bigger number for SMA. Because the SMA is good at bigger numbers, the EMA is also good at smaller numbers. So if you want to combine the two, then this will be the way to go. Is that okay? But you can choose to use only one. You can choose to do only exponential moving averages or only simple moving averages. You can choose to do that. Now, I want us to put our two moving averages on the chart and look at how they cross. So moving averages, when you go to the indicator column, you look for trend. They are always under trend indicators, and they are already in the MT4. They are custom indicators, so you don't need to go and look for them anywhere. They are already in the MT4. So you go to moving average, which is here. You double click on it to open. Let's use, okay, 50. Let's use 50, which is already in there. 50 for MA, simple moving average. Let's make the color blue. So, okay, so this is simple moving average. I pray that you see it well. Now let's go back and bring the next moving average. Let's make it what? Let's make it what? 20. Okay, 20. And then let's change it to simple to maybe exponential. And then let's change the color to red. And then okay. So the red color is the 20. And then the blue color is the 50. Now let me zoom so that you can see it well. Now, this is AUD/JPY on daily time frame. Now, if you look at this as a trade, you would see that this trade has been in a bit of consolidation for some time. It has consolidated over here for some time, and then it broke out of the consolidation and gave a very nice trend. Again, you can see the same thing here. There's a bit of consolidation here. It broke out of the consolidation and then gave us a nice trend up. So we are saying that moving averages will not be able to give us good decisions during consolidation phase. But let's zoom out and see this. Now, we are saying that when the red, which is the smaller one, which is the 20, crosses the bigger moving average, which is the 50, then it is a signal. So for instance, over here, we had a cross over here. So we've had a signal here. So the cross over here, you look on which candle the cross happened, which is on this candle, this one over here. So the cross happened on this candle, asking for what? A sell. So if you sold from that candle, which was here, how many pips down? Let's look at how many pips would have been for the downside. That is 232 pips. okay? And then the trade started moving back up. So when the smaller one crossed the bigger one down, it is a sell. When it crossed down, it is a sell. When it crossed up, it is a buy. Do you understand? This is often the strategy. The strategy is that when the smaller period or the smaller moving averages crosses the bigger ones, up means buy, down means sell. In our case here, the red is the smaller one, which is the 20. And it is also exponential. And then the blue one here is the 50, which is the simple moving average. So when they cross, I am just using this for example, the purpose of example, okay? Maybe after this, you can look for better. People have done videos on how best to set your moving averages to get the best entries. So I am just using this for example purpose. I am not saying that is the figures you should use. I am not saying you should use 20 and 50. I am just using this for practical purpose. Is that okay? Good. Now, let's see the next cross over here. There's another cross here up, asking for a buy. So you see that if you had entered a buy here, the market didn't go up from here. It only went up 33 pips and started coming back down. Started coming back down to about 350 pips. So you would have lost this one. But don't forget that it is during the ranging stage. Look at the range of the market. It's in the ranging phase. So we are still telling you that when the market is ranging or consolidating, you may not get best entries with this moving averages. Now let's see. There's another entry somewhere here. Try to go, come sell, cross, but didn't cross. It stayed on the 50 at this point here. It stayed on the 50, couldn't cross the 50, and then made its way back up. And if you look at it from this angle, if you entered a buy from this point, after it left the consolidation zone, that was here. If you entered a buy here, all the way up, that's a 788 pips for 13 days, which is 2 weeks. So in 2 weeks, you would have gotten 788 pips. So those who actually trade for long term, they will be those to reap enough profit from this, especially people trading at Wall Street, those trading at Wall Street in the US. They are long-term traders. Some will set their trades for months, weeks, 6 months, 3 months before they close them. And so they do not care about whatever is consolidating or whatever is ranging. They don't care because they have set their trades for a month or 2 or 3. They are not like we traders who are trying to cut 10, 15 pips, 20 pips within an hour. And that is why most traders are not successful. The reason is because we, the new ones, we are too greedy. We want to make profit from the market so fast because already our capital is very small and there's too much pressure on us. There are a lot of bills on us to pay. So we are pressured to look for money every minute, every second from the market. And that is what brings the mistakes. And then we lose the money. But those at Wall Street, they have the money. They are prop firm traders. They trade for prop firms. They trade for institutions, companies. And these institutions and companies have the money. So when they are trading for them, they do not care to set up a trade for a month or 2 or 3 months or 4 months, 5 months, 6 months. Some can even set their trade for the whole year. Once they catch a trend and they say this trend is going to go up for only God knows when, they will enter into it and they are good to go. Maybe if you think that strategy is a bad one, those who are intraday traders, if you think their strategy is a bad one, let me just show you an example. Let me go to weekly time frame. Look at weekly time frame. Assuming a prop firm trader, okay? So using moving averages, look at it carefully. So if you are going to be using moving averages, I would advise that you should trade like the prop firm traders. So they got a buy here. So this is where the buy crossed here. They enter into a buy. They set their trades for maybe 6 months. They enter a buy here for 6 months. Now, every 1 month is 4 weeks. This is on weekly time frame. Up to where we are currently, that is 87 weeks. So 87 weeks will be how many months? And this is about 1,632 pips. 1,632 pips. So 1,000, let me write it. 1,632 pips. From this point here, from the crossover here to the top where the price is currently, 1,632 pips. If the person decided to use 0.01 as a lot size, you know what the person would have gotten now? Every 1,000 pips, every 100 pips is what? $10. Every 100 pips is $10. Every 100 pips is 10. So 100, 100, 100, 10, 10, 10 times 10. Okay? That will be, so the 1,000 pips will be $100. And then 632 will also be 63. So in all, the person is going to make 163 pips. Sorry, $163 with 0.01 as a lot size. 0.01 as a lot size. The person is going to make 1,632 pips, which is $163. For how many months? Let's look at the month. Every 4 weeks. Every 4 weeks is 1 month. So we have 87 weeks. 87. That is about 4 months, almost 5 months. It's not even up to 5 months. That is about 5 months. So in 5 months, imagine, okay? I'm just trying to teach you how the prop firm, those who trade for institutions, how they trade. Imagine the person had only $100 in his account. Okay? Imagine they had just $100 in their account. Take your time and listen to this video to the end. Assuming they had just $100 in their account, and then they decided to go with 0.01 and then leave this trade for 6 months. They don't care whatever happens, 6 months. So their $100 in 6 months is going to give them a profit of $163. So plus their $100 as deposit, this is going to be $263 in 6 months. So in 6 months, they have 263. So ask yourself that which investment in the world will give you an interest of $163 on $100? It is my biggest question. Which investment will give you $163 here in 6 months on your $100? Is there any institution like that? If yes, please tell me. I want to join such an institution. I'll just pump my money to them and then be relaxing. There is no such institution. If someone deceives you and tell you there is such institution, the person might be a scammer. He might want to scam you and take your money away. So do not fall for such institutions because they are real. They are rare to find, not real. They are rare. They are not easy to find. But Forex is there to help you gain that. So this is where they say Forex is a money-making system. It's not just a day get rich quick syndrome or get rich quick kind of system. So those at Wall Street, imagine, let me just use this. Let me clear this. The very first 6 months, he made $163. Look at, let me go back. Look at when they got another signal to go sell over here. They got another signal to go sell here. Look at it. Do you see it? So from here, which is on this candle, all the way down to this year, it's about 107 weeks. So for 107 weeks, this has been trending sell, sell, sell for 107 weeks. 107 weeks. And that is about 2,228 pips. 2,228 pips. 2,228 pips. Okay? and 100 and what? How many weeks? 100 and let's even say 110 weeks. Even if at maximum 110 weeks. What will be if it is every 4 weeks is going to be 1 month. Okay. So this is 4 divided by 110. Quickly, those who have the mathematics should do this for me. But let me calculate it so easy so that we can go. All right. 110. I'm using my phone calculator. 110 divided by 4. That is 44. Oh, I'm wrong. Okay, every 4 weeks divided by 4. Okay, that is about 27. That is what I'm getting. So that is 27 months. Am I right? I don't even know if I'm right. But assuming the next 6 months. So the next 6 months will be 6 times 4. Okay. 6 times 4 will be how many months? Let's say yours is 6 times 4, which is 6 months. 6 times 4 is 24. So 24 weeks. So let's go for 24 weeks. Okay. From here up to 24. Oh, that shouldn't be it. Oh, I'm lying. Okay, 24 weeks. What is 24 weeks? But maybe if the calculations are not right, but let's assume you have decided to do another 6 months. So in another 6 months, you are going to get another huge profit. Just assume that the next 6 months, you got another 160 whatsoever pips. You got another $163. So in a whole year, because here 6 months, over up here to 6 months. So the profit alone is $326. $326. Okay. $326 on just $100. So in a year, if you make $326 on just your $100, will you say that Forex trading is not a good venture? I'm sure you cannot say that. So those who trade for the prop firms, this is what they do. They go on higher time frames. Some can even set their trades for 2 years. Yes, they can set their trades for 2 years. That's what we call investment. They invest for 2 years, 1 year, and then they sweep all the profit. Imagine just $100 could give you 300 and something as profit. So if you had about $1,000, how much will you be making? All right. So this is what it is in terms of moving averages as a strategy. Those who use them most are those who trade with the prop firms. They trade with higher time frames. They go on the weekly, the monthly time frame to zoom and then go in for long term. Do you see this? Maybe let me pick another pair, Chef JPY. Look at this one too. Look at the entry point. This is still on weekly time frame. There is a buy here. See buy over here. And only God knows how many weeks this thing has been going up without going back down. It's been going up, going up, going up, going up. Because so far as the small moving average, which is the red one, remains on top of the blue one, you are still in an uptrend. So far as the red one, which is the 20 EMA, remains on the 50 SMA, you are still in an uptrend. But when the 20, which is the red one, crosses the blue one down, then it means you are back into the downtrend. But look at it. Since it started an up move, look at the number of weeks. This is every one candle is a week. Every candle is a week. So imagine how many weeks. So even if this is 2 years, this is another 2,000 pips. If you decided to place a trade for this for 2 years, it means every year you get 1,000 pips. In 2 years, that's 2,000 pips. So you see how the long-term traders trade with Forex. This is how those at Wall Street, this is how they trade. So when it comes to moving average, you can do this on any time frame. On the 1 hour, we those smaller retail traders, we do it on the hour. Look at it. Even if you are a smaller time frame, this on the 1 hour. So on 1 hour, you get a buy here. Look at it. Only God knows. See how it remain up there. This is on the 1 hour. Or you get, I've gone back. You got another 1 hour here. You got a crossover here to go by. Look at it. Another 173 pips to your credit. So you would have gotten out from when there's a cross again. So if you want to use this to exit, once it gives you a buy, you enter. How do you use the crossovers to exit? That is the next question. Because we said that a system should be able to tell you when to enter, when to exit, and then the trend. So already it has given us the trend of the market, and it is telling us that it is a bullish market, and it is giving us an entry here for a buy here. So we remain in this for a buy. When do you get out? Until when there's a cross. Once there's a cross in the opposite direction. So we got a cross somewhere here. So we'll get out from here when there is a cross. This is on 1 hour. Share JPY. So we would have gotten out of the market from here. And we would have still made 107 pips. 107 pips. So this would have been our exit point. All right. This would have been our exit point. And if you entered again here for a sell, you wouldn't have made anything. You would have lost this one, maybe something very small because there's a cross here. So let's say you entered here and then it crossed again here. So you would have lost 28 pips or 27 pips, but you would have made already the first 100 pips would have been made. So this one you entered again for a sell, you made a loss of 29 pips. And then you quickly went for a buy here because there's a cross up. So you entered a buy. Only God knows how many pips would you have made by now. So you lose small, you gain big. So you've made another, so far, 572 pips. So far, you made the first 107 pips. You lost 28 pips. You have made another 572 pips. So 572 plus 107, that is about 684, 584 pips or 684 pips. And then you subtract 28 pips loss from it. You still have huge profit at your disposal. So this is moving average strategy that people use. This ones I have just given to you here is for the purpose of example. I am not saying this is a good strategy to use because I selected the 20 and the 50 randomly. One is exponential, the other is simple move. I just selected it off head. I selected it off head. So if you want good systems, people have made a lot of videos on the internet about what they think is the best crossover strategy. You can watch them and begin to try them and see if they can make you some profit. If not, I would suggest that you can begin to put in your own numbers, just like I did by putting the numbers off head. You can also put some numbers off head and then test it on demo. That is why one thing I love about Forex trading, there is always a room for you to practice. So you practice whatever strategy you have, practice it and see how it will turn out. Once it turns out good, then you have found something for yourself. Or you can keep experimenting different figures and see how things will be. But if someone is having a good one out there and it is good to use at a go, then hallelujah. You can go pick it up and begin to use it for your own benefit. This is how moving average crossovers work. So first, they help you to determine the trend. You see that it stayed up, 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 up. So far as the red one is up, on the blue one, it's an uptrend. And the red one crosses the blue one up, it's a buy signal. It crosses down, it's a sell signal. Now, once you are in a buy signal and you are beginning to see a cross, once the cross happens again, it is time for you to exit. All right. This is how moving average crossovers work. Now, I want you to go out there on the internet and check if you can find good ones or good strategies in terms of moving average crossovers. But this is where time will permit me to leave you to do your own research about moving averages, how they work. Now, after this video, the next video is going to be how you can use moving averages as support and resistance. We have just talked about how you can use moving averages to determine the trend and how to use it for entry and then how to use it for exit. So you enter, the entry point is when there is a cross. That is an entry point for you. And then you exit out of that trade when there is a cross in the opposite direction. Then it's time for you to exit. Is that okay? That is how the moving average crossover system works. All right. Now, the next video, we'll talk about how to use moving averages as support and resistance. Support and resistance. We will look at it. Support and resistance. Moving averages. That will be my next video. Please like this video, subscribe to our channel. Expect more videos coming your way from this channel. My name is Kofi, your admin. If you want to have one-on-one chat with me, please, my contact details are already displayed here for you. You can get in touch for us to do the talking. Until then, I'll see you in another video. God be with you and be with me too. I'll see you.